Well, welcome to the online version of our what would be the 25 crop year crop insurance update meeting. This is Corey. I'm with KW Insurance in Sunburst, and I'm going to walk you guys through some refresher stuff. There's quite a few changes actually for this coming crop year for the better that the RMA made, and then we'll kind of just cover some topics that spread everything from those county-based SCO and ECO programs to the base prices and all of that. So, just a real quick note before we get started on our farm side of things. We're actually going to get out of the cow-calf pair stuff and go back to buying yearlings, mostly just to give us more free time in the winter, if I'm to be honest. But we've got a pretty darn nice set of young cows here that are about 1,200 pound frame size cows that we're going to preg check in December. That'll be for sale in January. So if you guys are interested in some bred cows, get a hold of us, and we'd love to kind of work with you on that. But so on the crop insurance side, claims reminders, updates. First thing is we're set up to print checks here now through our office through NAU. So if you're an NAU customer of ours, once your claim is finished, we can instantly print the check out, which is pretty cool. That speeds that up by several days. So that's one improvement here. Big thing is us, or if you're with another agency, if your claim isn't going well and you're sitting with the adjuster, give us a call. We're glad to help. We just can't be in the same room with you and the adjuster at the same time due to conflict of interest rules. But if you want to stop in the middle of the claim, give us a call and see if we can help some way. We certainly can do that. And the other thing is just don't sign anything if you're not happy with it. We can always usually get this stuff resolved. So if you have issues, give us a call. We're glad to help. That's what we're here for. And then ACH or direct deposit is also an option for these claim checks. If you have a lien or if you're financed through the bank, sometimes those don't go through. So that's why the check printing is so valuable too, to speed things up here. But if you'd like to get set up in direct deposit, we can do that as well. One more big thing to remember is make sure that if the adjuster is going to come out and settle this stuff in the bin for you, that you get bin samples set off to the state. It's especially important in years like this where we had all that heat in the summer, so we got low test weights, maybe some other quality issues with the grains as well. And then on top of that, it rained at harvest time, so you could have sprout, you could have low falling numbers, DHV issues on wheat. All of those are things that we can pay you more for on claims oftentimes, but it won't get caught if we don't send in samples. So if you're getting bins measured anyways, it's like $50 to have a sample run through the state. I would take the time to have the sample sent off and wait for that to come back before you finish the claim up. It can make a pretty darn big difference. One last thing, always make sure they take an accurate test weight if they're measuring your bins. Yeah, sometimes we all get in a hurry, and the adjuster might be in a hurry too, and he'll just want to measure all your bins quick and wrap the claim up. Make sure they take, if you don't send a sample off to the state, at the very least make sure they weigh the stuff so they get test weights out of your sample buckets, because that test weight on a 10,000 bushel bin, 55 pound wheat versus 60, that's 10% difference roughly, right? That could make 1,000 bushels difference in what they would figure in your claim. So one more quick reminder there. October 31st is the end of the insurance period for most crops, so if we get way late here and you haven't finished cutting, please let us know by October 31st so we can get an adjuster out there to look at it. And it would be September 30th, I believe, for the peas and the lentils. So if you have any pulse crops still out there, we're nearing the end of that date. I think we're probably all going to get wrapped up here, but if we get to October 31st, that's the next trigger date for that. There's also a couple more important dates, as you can see on this slide. Your termination date for wheat is November 30th. That means if you don't pay your wheat premium by November 30th, it'll terminate all the other coverage on your policy. So we never ever want to get in that situation, of course. And then the other thing with wheat, on winter wheat, they actually give us till November 15th in most of the counties in Montana here to get the wheat seeded by. That's obviously a huge window, and that won't be an issue, I would doubt, for any of you guys. But there is a separate date on wheat, which is October 30th. We have to have winter wheat seeded by that to still get the winter option. So that's just one more reminder there. So how was 24 in review? You know, for a lot of our area, better. We're very focused in Tooele, Liberty, and Hill County up on the High Line up here, and pretty good in the eastern part of the High Line. Not as good over here, and actually very dry in Cut Bank. But so you can look at this slide that we're looking at here. This starts in 21. Up in our area, we would have been in a D2 drought. in a D2 drought at the same time this year in 22, a D3 drought last year, and we're only in a D1 drought now. So at least we're improving, but we are still in a drought, right? It's been some kind of tough times here. So SCO and ECO estimates will review revenue claims that are possible because the prices drop so much in these commodities. And then the base price is set on winter wheat now. So it's your base for your winter wheat coverage this year is $6, which is down from $7.41 last year. So as expected, the commodity markets just keep kind of rolling backwards. We hope we're hitting a bottom here, but you're going to start with the $6 base price on winter wheat for this year. On the malt barley stuff, there's a lot of claims on the malt endorsement end of things. This is really highlight, I think, again, for a lot of you guys, why, if you can get a malt contract, that malt endorsement is worth paying for. I'll kind of go through some examples on that. We'll have an SCO discussion, of course, on how that's going to pay for this next crop year, and then a reminder on the enterprise units by type thing. There were some positive changes for 25. So in all the years we've done this, really all that's happened with the crop insurance program is they keep making it more complicated. Now, for the first time, kudos to the RMA, we're doing some things that make sense as far as simplifying it. So first positive change, this is a premium change, but on ECO, that shallow loss county program, your subsidy changed from 44% last year to 65% this year. So that's great news. That means that you guys pay substantially less premium for the same coverage in that program. On new breaking, we don't have to do written agreements anymore to get new breaking insured. So that was a very positive change. Everybody will just get 85% of the county average the first year that's seeded. And then CRP that's emerging from, or EQIP or anything that's emerging from a government program, we get 3 years instead of what was 2 years last year and prior to get this seeded and still receive 100% of the county average. Same thing on native sod, same penalties and stuff on native sod, but it's now insurable the first year it's seeded without a written agreement. So that was a positive. On the not so positive note, for the last 4 or 5 years, basically since COVID, they had extended the premium due date out to basically November 30th before interest would attach on all of these crops. We are now back to normal, which was September 30th. So that means everybody's premium now, if you don't want interest to attach, is due September 30th. So that's kind of a tough change to swallow when the commodity prices have tanked at the same time, but that just is what it is. There's no changing this. It doesn't mean you have to pay your premium by September 30th. It's not like they're going to cancel your insurance at that point. But if we don't get it paid by September 30th, 1.25% interest will attach per month for every month that we're late on this stuff. And then like we talked before on the wheat, if you don't pay the wheat premium by November 30th, that's the termination date, and it terminates all the coverage of your crop. So if you have wheat or forage, that must be paid by November 30th. The peas, barley, and all the other spring crops, those crops we have till March 15th to actually get that bill paid. But interest is going to attach to all that premium starting September 30th. There are finance options available for you guys if you can't get more money or you don't want to go to the bank and deal with this and your claim's not finished up. They actually would extend your wheat premium date past November 30th, but we need to line that out well before to get that set up. The farmer portal is super helpful with NAU, so if you guys just take your billing statement, then hit create login in here, it'll get you into what's called the farming portal, and in there we can see all of our premium, what's due now and what's due later. You can go in and look at all your farm maps in here. There's easy view weather where we can look at hailstorms. So get in there and play around with that farmer portal. I think you'll find it to be a very helpful thing. A quick reminder on the beginning farmer rancher or veteran farmer rancher stuff. If you guys are going to get your kids involved in your operation, it's very beneficial to start them out on their own entity and not just roll them into your corporation, because your corporation would not qualify as a beginning farmer rancher since you guys are in it. But if they start out on their own, they get all of these beginning farmer rancher benefits, which include extra points of premium subsidy, better yields when they have bad years. They can use neighbors' yields easier if they take some of that land over. To qualify for this, you just have to have less than 5 years experience in a farmer ranch, which that'd be financial interest in it. We can exclude the years they were under 18, in active duty in the military, or gone to college. And we need to fill out an app before this deadline, so before September 30th to get that qualified. Like we just talked about, they get an additional 10 points of premium subsidy. So in an enterprise unit, they pay 80% of your premium roughly on that. they would pay 90% of the beginning farmer's premium, so they would cut the premium in half compared to what a non-beginning farmer would pay in the enterprise unit structure there. So pretty big deal. On native sod breaking, it's uninsurable without a written agreement. So that actually, this slide is old. It is now insurable the first year without a written agreement, I should say. Must be broke by June 30th for fall seeded, November 15th for spring seeded. It says that on this slide, but they changed those rules as well. So they took the breakout dates away too. The only thing is there's no getting out of being penalized on native sod for the first 4 years that you seed an insurable crop to that. So they're going to take and give you 65% of the county average for the first 4 years you seed this stuff. Plus they're going to take 50 points of your premium subsidy away. So that will more than double your premium on this stuff. But after the 4 years, it rolls into normal crop production. So some positives there in that we don't have to do a written agreement to get it insured the first year, but you still have to incur these penalties for breaking out native sod. Big deal on this is to make sure you go to the FSA and get that approved before you do any of that, because if you don't, that could disqualify you for a lot of government programs and our subsidies on this side. So make sure you talk to the FSA before doing any new breaking. Here's another positive change we just reviewed, but CRP breaking now receives 100% of the county average if seeded within 3 crop years of coming out of the program. It was 2 years prior. So if you guys are breaking out some CRP, you're taking over some neighbor stuff that's rolling out of the program, you get 3 crop years to get that seeded and still get 100% of the county average on that, what is basically breaking, right? The most important thing to understand in this is the fall of 2019 starts the 2020 crop year, just like if you had seeded winter wheat then. So you'd have, in this scenario, you get 3 years after it comes out. We're going to say this came out in the fall of 2019, which starts the 2020 crop year. So you'd have 2020, 2021, and 2022 to get this seeded, right? If we get past into the fall of 22, then we would be into actually the 23 crop year and would have missed our window. So it's pretty important to understand it's not the year that it's seeded in, it's the crop year that it's seeded in, and just make sure you check with your agent after that. After 3 crop years, it's just like it had been a stand of grass or hay that was in for a long time and it becomes new breaking, and it'll get 85% of the county average now. In the past, that would have become uninsurable if we didn't do a written agreement, and at least that's changed for the better. So they also removed the breaking dates for 25. So in the past, we had to have stuff broke out by the fall to seed it in the spring if it was a new breaking situation. Now there's no dates in there restricting when you break that stuff and seed it. So you could literally break it, seed into it in the spring, and be fine as long as that is a good farming practice. Added land, so if you get over 2,000 acres of added land, then you're stuck with the county average is kind of the summary of this slide. If you're under 2,000 acres, we can use the better of the average of all your other units in that same map area for that crop, or the county average. So if you get over 2,000 acres, you get restricted on some of the yields that we can use. That's why on big acreages like that, if you can get a share lease structured the first year, we can always grab yields as long as your landlord will release the yields. We can get the yields from him, structure that share lease for a year, and then roll into a cash if you want to after that. The winter option, always take this option. It costs 10% more on your winter wheat, but it gives you 3 options if that winter wheat fails. So the first thing is, if you don't take the winter option, this replant payment, which is the first option I'm showing here, is the only thing that you can do. So if all of your winter wheat fails, we're going to force you to seed that back to spring wheat, and we'll pay you the replant payment. If you pay for this winter option, the second option is the most popular. If all of the winter wheat were to fail, which happens from time to time, you can take your money completely out of the winter wheat so that we could zero it out, and then you could reseed it to any other uninsured crop that you want. And that's the most popular thing, because sometimes we can kind of hit a home run in this scenario where your winter wheat fails, that sucks, but we pay you for a full crop there, or at least a full crop insurance payment. If you seed it to spring wheat and it rains, or barley or peas or whatever, and you pull a second crop off of there, that's the best case scenario. Now, that's very seldom happen here, but it can. But the biggest thing is it gives you the freedom to do whatever you want with that winter wheat instead of being forced to reseed it to spring wheat. And that could include fallowing it too if you wanted to at that point. You must seed the winter wheat by October 31st to still be qualified for the winter option, even if it's on your policy. So just one more thing to note as far as dates. November 15th, like we said before, is the final planting date for winter wheat. After that, you start getting penalized percentages per day for your coverage. This slide just always makes me laugh because it says you see the 10,000 acres in the final plant date. I'm not even mad. That's amazing. Well, we know sometimes it's easy. There is no rule saying you have to put every single plant date on your maps. So long story short, if you finish seeding on May 15th, you could put that for every field on your policy. If we get maps back that have all May 31st, which is the last day before you start getting penalized on your spring wheat for your spring crops, then that looks a little bit more shady, right? And that's just sort of what we're giggling at here. But anyways, the triticale, it's insurable in most of our counties now. This isn't in Hill County or Glacier County yet. We can't do a written agreement to get triticale or triticale insured, but I think in the counties that you can't insure it as grain and you could insure it as forage through a NAP policy. We just got to make sure that you classified it right on your maps. But it's insurable in most of our counties that are around us now. You can use production contracts to increase your coverage. So that's one very attractive thing with this policy, is that if you can get a $10 contract for growing triticale for seed, we can apply that to your insurance and up your coverage a lot. There's winter and spring types. It must be seeded with the intent to use for grain for us to insure it. Like we can't insure stuff that's intended to be used for forage. So you can hay it if you want. You could go into it with the intent of seeding it for grain. You would call us, we'd turn a claim, or we'd turn in appraisal, and then an adjuster would come out and appraise it and assign so many tons to it, and we can get it released to be hayed, just like any other crop that you seed. But on your maps, we need to know that your intent is for grain. So if that's the case, we can insure it on this policy. Your base price right now is $517 for the winter type, with the max contract price of $1173. If you're organic, you're going to have a higher base price but a lower yield. And there's some pretty high yields on this crop. You can see in map area 2 of our county, which is average to poorer ground here, it's 38 bushels on summer fallow and 25 on recrop. So pretty good yields. I guess it really does yield pretty good in some pretty tough spots. So it's worth looking at. The downside of this crop, if you were just going to try and use this as another cash crop in your rotation, is there's no ECO or SCO on it. So no county disaster programs that have helped so much here with us, and no revenue protection. So those are two things that are not as good on here. But at least we have the opportunity to possibly insure it now, which is great. There's just a little video here that kind of walks you through pasture, rangeland, and forage. December 1st is the date to sign up for this program. This has helped a lot in the drought with ranchers. If we have most of our guys in this program sign up for April, May, June, and July. The reason for that is because if it doesn't rain in those 4 months, you basically don't have grass, at least where we're at here. So there's a whole variety of ways to do this, but you have to pick two sets of 2 months. And then when we put whatever percentage of acres you want in there, it's got to be more than 10% of the total in each one, I think, or something. And long story short is this is a great way to simply insure your grass or your forage without having to keep a bunch of records and stuff, and it just triggers off of rainfall. So this video is just going to walk you through that real quick. Well, maybe it's not. Sorry, my video is not working, but you get the gist of it. If you're more interested in that, just give us a call here and we'll get you going by December 1st. So enterprise units by type, this was new in 22. What a great thing this was when they came out with this rule. So now we can split winter wheat from spring wheat from durum into separate enterprise units. So we can take advantage of that huge discount we get for doing enterprise units. We can put all the winter wheat in one area of the farm, the spring wheat in another, and maybe the durum in another area, and basically keep it separate by area if we want, but still get the enterprise unit discount, and it will split each crop out separately on a claim. It's also available for peas, chickpeas, and lentils. It's not available for barley yet, so I would expect at some time in the near future that will be available on malt versus feed barley, but I can't see the actuarial stuff for next year in there yet, but by December we should know roughly if that is going to change for next year. It's the same premium discount as before, but now we need to make sure we seed 2 sections of each type of 20 or more acres or more of each type in a section. So I'm going to walk you through that in an example here. First example is we've got 100 acres of winter wheat that we're seeding this fall in section 1, 40 acres of winter wheat in section 2. Does that qualify for an enterprise unit by type? Sure it does, because we've got more than 20 acres in 2 different sections, right? But what happens with this oftentimes is we get into the spring and we think, oh, well, we're going to put just a little bit of spring wheat in. So we go seed just section 3 to spring wheat. Does that qualify for an enterprise unit on its own? It does not, right? Because we don't have 2 sections with 20 or more acres of spring wheat. So our option at this point is to throw these together back the way it was in the old enterprise unit structure. So your spring wheat goes with your winter wheat. You can keep the discount. Or as long as we do all this by acreage reporting time, we can split the spring wheat off into a basic or an optional unit, and you pay the higher premium rate on the spring wheat. Still leave the enterprise units in the winter wheat. So it's pretty important to make sure we keep track of where we're doing these more than 20 acre pieces, just so we get you the maximum discount on the insurance, right? Another example, we did 100 acres of winter wheat in section 1, 40 acres in section 2, and then in the spring, 200 acres of spring wheat in section 3, 300 acres of spring wheat in section 4. So now each type has its own enterprise units because we have more than 20 acres in each section. So we always like to do just a quick refresher on that. And why do we want to do that? So you can see here's a quote, optional units versus enterprise on wheat. 1169 for the optional unit quote here and 436 for enterprise. So it is about a third of the premium if you can get that enterprise unit structure set up than it would be if you were in an optional unit. It makes more sense now than ever to just switch everything to enterprise units by type if you can. And there's different ways we can structure this. We can split your enterprise units up by irrigated and non-irrigated practices. But if we do that, then the types don't get split up as well. So you can only elect one of these options. We can also now split, which is new for this year, enterprise units by organic and non-organic practices as well. But if you do that, like I said, we can't split the types up. All the wheats are going to get thrown together on the organic and all the wheats on the non-organic side. So I really like enterprise units by type as long as you take the time to plan things out so that all the crops are grouped in different areas of your farm. It really eliminates a lot of the risk of doing enterprise versus optional units. And I would just seriously look at that because that's one way you can cut your premium a bunch. And what a lot of our customers have done is chop their premium off doing this and then put that money into ECO and SCO, which adds a whole bunch to your coverage in the end. So on the malt barley endorsement, this is a big deal this year because there's a lot of sprouted barley, there's a lot of high protein barley, just a lot of stuff went wrong for the malt barley end of things. So here's a quick example of how the malt endorsement works. This is somewhat oversimplified, but this is pretty close to how it would end up shaking out for you guys. So we're going to say you cut 10,000 bushels of barley and all of it got rejected because it sprouted, let's say. The maltster sends you a letter and they release it and they say, okay, we're not going to buy this for malt. So that's the first step in the claim. Once we get to that point, then your adjuster figures out what you got for it as feed barley, because we're going to have to deliver all this barley for this to get paid too. That's the second thing I should mention here. But we deliver the barley, we get $4 a bushel for our feed barley, so we have a price to use there. Our malt contract is for $8 a bushel. So we got half of the price that we would have had we actually realized malt, right? So the first thing that we'll do then is they'll come up with a factor, which will be 50% in this scenario, because we got half of what we should have for the price. They're only going to count 5,000 bushels then against you for the claim instead of the 10,000. So that's where we pay you more when it doesn't make malt. Now, if your guarantee on this unit was 8,000 bushels, let's say, if you cut 10,000 bushels of barley, we'll reduce that down to 5,000, but we're not paying you a claim until we get below the 8,000, right? So if you have a lot of bushels, there's times in here where you're going to have kind of a gap where not all of it is paid because it didn't make malt, but you got more bushels to sell, and you should end up in a similar place as what our revenue guarantee was to start off with on the insurance. That's the second part that goes into this, is this year, because we're in revenue protection and in the malt endorsement, so we were able to use our contract in RP. That's the only way to do that, is to be in the malt endorsement. The price of wheat dropped 20%, and when that happens, we get to use the revenue drop as part of our claim figuring too. So like I said, this is a bit of an oversimplification, but this is basically how this would shake out. Because the wheat market dropped 20% roughly in this scenario, we're going to take away another 1,000 bushels off of this claim, because we're only going to count the 5,000 bushels that are counting against you is going to be worth 20% less. So you end up with only 4,000 bushels counted against you for the claim, and that's how things kind of snowball on the malt endorsement. That can end up in pretty big differences in payments doing it this way versus doing yield protection and using your contract price there. The second thing that'll happen then, especially in a sprout year, is sometimes that will go what is called on the discount charts in the actuarials for barley. So even if you didn't have the malt endorsement, you would qualify for this part. But if you've got a bunch of sprouted barley, if you get on this chart here and you look, if you have 30% sprout in your barley, they're going to take 43% of your production away, roughly. And so that actually stacks. If you have the malt endorsement and we get that reduction, and then we've got enough sprout to fall into these damage charts in here, that stacks again on top of that. And in this scenario, if we had that kind of sprout, we would have taken that 4,000 bushels that we had for your claim and then reduced it in half again, right? So this is just an example of that is the perfect scenario for to maximize the insurance, is to have sprout that is in this 20 to 30% range that gets us on these charts. It doesn't discount what they pay you for the feed barley very much usually if it's sprouted, but it's just the way the rules work on the insurance. They don't care about that. They just have to use these discount factors at that point. Now, if you get over 34% sprout, you fall into section B on this chart. That means that they would just take what they gave you for the sprouted feed barley versus normal feed barley. Oftentimes, there's not much of a difference in there, and you can end up worse off with more sprout if you get above that 34% than if you landed on the chart. So just weird little quirks like that. But if you can fall into that, get your malt payment, and then get your bushels reduced again because of the sprout in that 30% range, that would be best case scenario. That's what I'm trying to say. So prices for winter wheat this year. So this chart shows from 22 up through now, right? And in 22, we actually went up 23% from where the base price was. That was kind of the end of our market run in wheat. Since then, we've just started tapering off. So we were at 86% of the harvest price versus the base in 23. When that number goes down, it makes it easier to get paid a claim even if you cut some decent bushels, because we're going to value those bushels at less. This year was one of the biggest drops I probably have ever seen in 1 year. So we are at 74% of where we started. We started at $7.40 a bushel, ended up at $5.48. So as you can see, you basically can cut 25% more bushels this year than what your initial guarantee was and still end up in a loss payment. We're starting out at $6 a bushel for this next year. So let's hope that we don't end up 25% down from that. We got to be about at the bottom of this thing, I would think. But either way that revenue moves, it helps your claim. If it moves up above that, we just have to have a bushel loss, but then they pay us more per bushel on the stuff that we've lost. So this next slide just sort of highlights, I think 3 or 4 years ago when the wheat market had kind of peaked, we kind of predicted that where we were headed is what was going to happen, and it has triggered some pretty good payments on a lot of these county programs because of that. But long story short is anytime we hit a bunch of inflation or a recession or any kind of an economic disruption like these interest rate things, if the commodity prices are peaked at that point, they seem to always collapse and collapse pretty quickly. And so the whole point of this chart is we can kind of learn from the past, and when we hit big run-ups in wheat like that, just kind of be prepared for what's happening. And now we're not prepared at all for the economic situation we're in at the moment, obviously, but hopefully things turn around for the better. And the other thing is when things drop off that far, usually they'll correct back up a little bit too. So I hope that's where we're heading. And this is our comparison in premiums to last year. Obviously the coverage is down because the price is down, but so is the premium. And the other thing that helps here, it's probably hard to see on this, but your ECO premium basically dropped in half, even though the coverage only dropped about 25%. And the reason for that is the extra subsidy on there, right? So in this wheat unit that we quoted on Wendy's policy, we went from almost $18 an acre for all of the products stacked on top of each other down to about $13. So we are at least seeing some softening in the cost part of this as well. Obviously, some of that is less coverage, but a lot of it is that extra subsidy too. So how about the base? What happened with the other base prices and harvest prices for a lot of these other crops this year? The winter wheat, like we talked about, is down 26%, so that's a positive for a claims thing. Spring wheat didn't drop as much, and a lot of that was because by the time they set the base price for spring wheat this spring, we'd already lost quite a bit out of that market. So spring wheat's down 14%, but that'll still help in the claims. Durum follows spring wheat, so it's down 14% as well. Oats down 11%, and then barley on the feed barley side is down 16%. So all of these commodities saw a drop. that actually helps, like we talked about before, with your claim payment, at least, if there's any positive in that. So, and the next thing I always try to review is how does this revenue protection stuff work, right? So here's an example of what happens when the price goes up at harvest. So in the spring, we're going to say that we started with $5 a bushel for our base price. We have a 30 bushel guarantee on this unit on our crop insurance. So $150 an acre is our guaranteed revenue here. That's the 30 times 5, right? So at harvest, we cut 10 bushels an acre. So kind of like this year, bad drought situation, at least in southern Tooele County. But then the price increases. So in August, when they do the futures pricing again for the crop insurance, it goes up to $10 a bushel in this scenario. Your guarantee then increases. So the first thing they're going to do is go up your guarantee to your 30 bushel guarantee times $10 instead of 5. That gives us a $300 an acre guarantee. If we got 0 bushels then on our wheat unit, they'd pay us $300 an acre instead of the initial $150 that we paid premium on. So great deal for the farmer here. So we've got the 10 bushels to haul to the elevator. Hopefully we get to sell that for the $10. And then the 10 bushels for your claim are valued at $10 a bushel, so $100 worth of production. But remember, our guarantee went up to $300 an acre. So we take our $300 new guarantee minus the $100 that we harvested. In this scenario, we'd have a $200 an acre loss payment, which is higher than our initial guarantee, and we still have 10 bushels to sell. A scenario like this actually happened. It was in 2021, I think, where we had this huge run up in the market. Lots of loss payments, and we got way more money than what we initially banked on in the crop insurance. So very important to be in the RP side of things for that reason. So what happens if the price goes down at harvest? So if the price goes up, we have to be short our bushel guarantee to get paid, but they're going to pay us more per bushel, to put it in simple terms. If it goes down, so here's an example. We started with the base price at $10 a bushel. We have a 30 bushel an acre guarantee again, so $300 an acre. So we're starting with a $300 an acre guarantee. We harvest 30 bushels at harvest, so we cut our guarantee, right? And if we were in YP, we'd have no claim at this point. But because we're in revenue protection, after that August average, they released a $5 a bushel wheat price. So the market just totally fell apart. So the 30 bushels we harvested now is only worth $5 a bushel. As far as the insurance views it, you could have sold your grain back when it was $10 and deliver it at the elevator, and the crop insurance does not care about that. All it cares about is what happened with the futures market. So your crop's now valued at $150 an acre. That's your 30 bushels times the $5 harvest price. But they never dropped the dollar guarantee below what we started at. So $150 an acre loss payment because we've got our $300 an acre guarantee and only cut $150 an acre worth of crop. Even though we cut our bushel guarantee, we still get $150 an acre in loss payments. So just a real quick review on how that works when things go down. That's why you can cut way more bushels when the price drops at harvest and still get paid on the crop. So these falling harvest prices, this is why it also helps the ECO and SCO. Because if you're in revenue protection on your underlying policy and you're in these county-based programs, it also is in revenue protection on the ECO, SCO stuff. So here's an example that we're going to say Tooele County's average wheat yields 36 bushels an acre. We had a $9 base price in wheat in this example, so $324 of expected revenue for the county. Now remember, ECO and SCO are triggered on the county level. So it's whatever the yield is for the county for all the wheat in the county. And then whatever happens with the price in the fall, if you're in revenue protection, also will influence this. So the grain market declines to $7 a bushel, but the county harvested 38 bushels an acre worth of wheat. So we're actually 2 bushels above our average yield for the county in this scenario, but the price went down to $7, right? They're going to take the 38 bushels you harvest times the $7 harvest price and say that the county only realized $266 an acre for the gross wheat take there in the county. So you take the 266, divide it into 324 that we were expecting in the spring, and the county ends up at 82% of the expected value that they were initially going to cut. So in these county programs, like in this scenario, we had a really pretty good crop in the county, but because the price dropped, 82% gets you to where ECO triggers completely, because you get all your money in that program at 86%. And a lot of your SCO, if you're at the 75% level, you'll get some of your SCO money as well in this scenario, even though we actually cut an above average crop for the county. So Falling prices, it's really important that you're in revenue protection for this reason too, if you're going to be an ECO and SCO, because those falling prices really help trigger shallow loss programs more consistently. The other cool thing with ECO and SCO is that it stacks on top of your multi-peril coverage, and so you can't be in ARC and SCO at the same time at the FSA, but we can be in PLC and SCO at the same time. And what happened the last time we had this big drop in the wheat market is that we started getting PLC payments, we hit a drought, and the market declined, and so we got SCO payments, and sometimes we were getting underlying payments under crop insurance, and these things can all stack up on top of each other. So I really like being in PLC at the FSA for this reason as well, because it allows us to be in SCO on the crop insurance side, and if things really go bad, which this year we're approaching PLC payment status, that will stack on top of whatever you get for SCO payments as well. So how is this paid through our agencies? So this is just a bar chart. You don't care about every year in general, but the first year ECO was offered that we could stack on top of SCO. That's also the same year that the commodity markets ran up so high. So you can see in 21, $700,000 in premium of this through our agency and $7 million in claims paid out. So 10 to 1 for what was paid into premium. So that's an example of what can happen when the market runs up as well. As a whole in our agency, and we've got stuff from Hill County all the way to Glacier and then way down into the south part of the state. So this is pooling all that together. $2.5 million in premium paid in over that time and $13 million in loss payments. So it's been a very effective program for the droughts that we've had to survive through here. Last year, which was a pretty bad drought in a pretty large area up here, we had about $2.5 million of premium paid into this program through our agency and about $11 million in loss payout. So about 7 times what was paid in was paid out last year. Very, very helpful in these areas where we have disasters. And with the uncertainty with the government and the willy-nilly nature of the disaster payments anymore, this is a much more stable program that consistently triggers when things go poorly in the county. And that can be a major decline in revenue with kind of an average crop like we talked, or possibly a drought situation where we have below average crops and the price can go up and we get more money than what our initial guarantee was. So I'm a very big fan of these programs. If you're in counties where it hasn't paid for several years, your odds of it paying are going up because your yields are going up as well. And that's what you're seeing in this chart. So where we're going to hit a wall eventually here in Toole County and Liberty County is we've had so many years of D2 or worse droughts that our yields are getting drugged down in this program. So we started at 36 bushels for wheat in Toole County. We're now down to 29 bushels an acre for the county for average there. Liberty County, it took a while to correct there, but they must have finally looked at that, and we corrected from about 44 bushels down to 38 in Liberty County as well. We're still at yield levels where this program is going to function fine, especially with a lot more recrop in these counties than there used to be with peas and stuff in the rotations. But if we can't get out of this drought cycle, hopefully the government does something to cushion these yields from dropping too low, because if we get down to 20 bushel average for wheat in Toole County, it may not be worth participating anymore in this. So every year we report this, we show you the trend yields. You can see in Pend Oreille County, they had multiple good years in a row. So their yield on wheat went from like 44 bushels up to almost 50 bushels an acre. And that's what I'm saying. In Pend Oreille County, if you had a blip like 2 years ago, if you have any kind of drought, this program will pay. Blips on the price too make a big difference. And Pend Oreille now has consistently been paying the last several years because of that. So very, very worth looking at in any of your counties. There are some outliers like down in southern Montana where Broadwater County has some weird yields. Some of those counties like Broadwater might throw multiple counties together because there's not a big enough pool of wheat down there. So make sure you understand the pool that's been drawn from for figuring your yields out. But for the most part, all these highline counties are county by county specific. So it seems to be functioning the way that it should. Anyways, so quick example for our farm. We always use Wendy's farm as an example, but this year we paid $29,000 in premium for SCO and ECO. Assuming that wheat and canola and barley pay, which I think is pretty likely in Toole, especially for $29,000 in premium, we'd get $129,000 in payout, and this is only on about 3,500 acres of crop. So it's very helpful with bridging gaps in these bad years where that very well could be about the amount of money we would lose in a year like this. as far as going backwards in equity. So big fan of that program. If you want to know where to find your guarantees, this next slide is showing you on the back page of your schedule of insurance that we would have mailed you guys after you did your acreage report. It'll list your barley RP, that's your individual barley coverage, where you see highlighted here. The next two lines show SCO and ECO. Under the premium liability column, it shows you the amounts that are the liability for this program for you, which means that's the amount that they would pay out if you got 100% payment. So if you want to find your totals, just add up the SCO and ECO for each crop that you think is going to pay, and that's roughly what you should get in May. Margin protection is another option on the crop insurance. It's a fantastic idea. There's a few things they need to eliminate in this to really make this work as well as SCO or ECO. And the first one is it's only spring wheat. So for now, that doesn't work very well, right? We're a big winter wheat and oftentimes Durham area. And if you elect margin protection on your wheat, we can't do SCO and ECO on it as well. So it's an either or thing on these programs. It doesn't stack on top of your multi-peril like SCO and ECO does. So if you have a $100 an acre guarantee on your underlying revenue protection unit for wheat on your farm, for example, and then we trigger a margin protection payment, we can never realize more than the $100 an acre that your underlying coverage is here. So to make this simple, if you get a $50 an acre margin protection thing triggered on your policy because the price of fertilizer went up and the yields were down or whatever, if it triggers a $50 payment on that, and we have a $50 an acre payment on your underlying insurance because you were short bushels or the revenue price had dropped, that underlying program's payment comes off of what your margin protection payment is before they pay you out. So it's a pretty expensive product for all of the quirks that are in there. I think it has lots of potential. I like the idea of tracking not only the yields and what happens with the grain markets, but also your input prices. But they need to make it so it stacks, and they need to get it on more crops than just spring wheat, right? So I wanted to cover that because I know that's something that's talked about quite a bit. Important notes on disaster programs. You must be in PLC, not ARC, if you want to be in SCO. We'll review that for the 5th time probably in this presentation, because every year someone screws that up. They say, oh, great, we'll sign up for SCO. I think that program sounds good, but they don't switch out of ARC at the FSA. If you don't do that, and we get to acreage reporting time, it's too late to fix the ARC thing, and you're just not going to have SCO for that year. So ECO has no FSA linkage requirement, so you can be in that ECO program. That's the one that pays from 95% down to 86%. You can be in that and ARC at the same time. So if you really want to be in ARC, you can elect ECO and stack that on top of it. ARC County is still the least likely program to pay out of all the FSA options for now. This is better than it was in the past because we were stuck at a $5 Olympic average price in that program for multiple years because of all the bad years of wheat that we had. Now I think you're up to $6.20 or something on that program for wheat, so that sounds better. But still, if we have a loss in the fall that would have triggered an ARC payment yield-wise, but the price goes back up on wheat, even back up to $8, it's not like crop insurance where your guarantee increases when the harvest price goes up. It actually takes away from your loss payment on ARC. And the other thing is, we'll get into a slide on this, but the amount that you can get paid is limited to 85% of your base acres as well. What's up with the Farm Bill? I would say it's pretty unlikely that it's going to renew this year. They're having trouble even keeping the government open at this point because of disagreements there. So the Farm Bill expires at the end of September. We had an FSA person at our meeting today, and they have no guidance on what is going to happen if that expires. And we're also headed towards a government shutdown. So long story short, most likely thing is they'll extend this Farm Bill one more year with all the same stuff in there. And that has some caveats that have created issues for people that have capped out things like the NRCS programs and stuff that they're not fixing. So really pressure your senators, if you can, to finish up this Farm Bill thing. It would give us a whole lot more clarity on where we're headed here in the future. On the PLC payment end of things on this slide, probably hard for you guys to see, but wheat now has a national average wheat price of $5.70 a bushel. That has only been averaging since June 1st, and we go all the way through May 31st. So if we remain in this down market on wheat, this is a nationwide average of all the wheats bundled together, and a lot of that wheat in the Midwest sells for substantially less than we get here. So I think it's very possible we could end up triggering PLC for the 24 crop year. Now that payment wouldn't come until October of 25, but at least we know what's coming at that point. So you can track this every month. You go on the FSA website and look at the program year specific data under PLC. Every month they'll release a new price, and we can track this as we're rolling along here and kind of watch that wheat price. And if it falls below 550, we'll probably qualify for some payments in there. So that's good news. That's a stacking situation again that we can get into. Bad news is when wheat's at 550, it's pretty hard to cash flow anything, right? But at least this will help. One other focus of the Farm Bill is to increase these PLC prices. These were set in 2014 when the last Farm Bill was enacted and never have been updated. So 10 years later, think of the amount of inflation, and we're still working off the same floor price for your wheat and your barley. That's obviously something that needs to be corrected. Will we get any disaster money? This obviously is a big question for everybody that are hitting a cash flow crunch here, but there's multiple things working in our favor here. And two of them, is, as you can see in this article, is that 23 and 24 will probably go down as the two largest inflation adjusted declines in net farm income ever. So we're hitting something that's getting very hard to adjust to as far as dropping revenue on the farm side and increased inflation, right? When those sorts of things happen, you see now headlines of stuff like John Deere laying off 1,000 workers or whatever it was, Fent laying off workers, places that are starting to show some financial strain here because the farm economy is starting to hit the skids. And so we've got that going on, and we've got an election year, which usually adds up to us getting some disaster money. So I would hope if Congress can keep going as far as keeping the government open, that's the first hurdle to cross. The next step that usually happens when we hit these things is disasters. So I'd give it an 80% chance that there's some other money coming above and beyond the SCO and ECO, I would think. Here. Big push to increase, so this is Farm Bill stuff, big push to increase those PLC trigger prices, or that'd be your base price for ARC as well, as low as ARC could possibly go. It's not likely to get finished up this year, but all major farm groups are pushing at least to get it done, so there's a possibility. And improving crop insurance seems to be a big focus, and one of their focuses that makes a lot of sense to me is upping the premium subsidy on ECO and SCO to 80%. So make those county disaster pool programs very affordable. That allows us all to pay into a pool of a disaster program and then get our disaster payments right away the next spring instead of waiting multiple years like some of these ARC, or not ARC, but ERP and these other programs have functioned like. So that's two very positive things that seem to be a pretty big focus, and let's hope that that can get accomplished in this Farm Bill. What do we think for this year for the ECO and SCO payments? If you're in any kind of drought county, so if you're already kind of below your county's average yield, and then we have a drop of something like 25% on the winter wheat price thing, we're going to get all of our ECO money. That's a lock. and quite likely all your SCO money. So I think there's a real good chance that we're going to end up with payments on this stuff in the drought counties. Same thing on barley. We've got quality issues on barley that's going to drop some yields as far as what the realized yield is in your production for this year. And then we've got a harvest price that's down almost 20%. So pretty likely on barley. Harder to predict on pulses. In Toole County, the pulse yields were really good on the north end of the county, or pretty good. I mean, probably average. Not as good in the south. So I might be surprised on the good side in the pulses, but for now I would figure not getting that for your SCO and ECO. But once we get all our production reports in about the middle of November, I'll have a lot better idea if any of you guys want to check back on that. Mustard, flax, and other specialty crops. What's important to understand on these crops that aren't as common in these counties is oftentimes they pool, like canola is 4 counties pooled together in our area to realize the yields for that crop, so it's harder to predict. Flax is a statewide thing because there's not enough acres county-wide anywhere for flax to be county-based. So some of these crops are over a lot bigger area than what you live in, so it's hard to predict whether they're going to pay or not. So I'm not even going to guess on those, but they have paid consistently the last several years when the whole state's been in a more of a drought situation. Full farm quote, if you guys want, if you're one of our customers that's watching this, we already probably sent you these quotes, but highlighted are the levels that you were at the previous year. Just important to remember that you would add up your SCO, your ECO, and your revenue protection premiums together for your total premium, but then you also add those coverages all together. They all stack on each other. So if you're just in revenue protection, in this example, you'd be at $121 an acre. You get another $14 of coverage out of ECO and another $25 out of SCO. So you can see how that stacks up to, in this scenario, closer to somewhere around $160 an acre, or hopefully closer to break even or above for you guys. But then the premiums are all going to stack together too, right? So what are the odds of these programs paying? And this is nearly the last slide of this thing, but I hope if you're in a county where this hasn't paid for a few years that you look at this and at least understand the odds of you getting more than your money back out of these programs for what you're paying into it are very high. So ECO, this is right off of one of our farm policies quote. ECO would cost is $14.58 for the coverage in this unit we quoted. It'll cost us $3.53 a premium, or 4.13 times the coverage versus the premium, right? So in other words, it needs to pay out once every 4 years to just break even on this program. ECO triggers when the county gets below 95% average, and you get it all when it gets below 86% average. So statistically, this program should pay every other year, because you're not just looking at yield here. If you're in revenue protection, there's also moves up and down in the futures market that can trigger this. So it should pay every other year or more. It has paid every single year since this has come out for us, because we've hit droughts and we're hitting commodity price declines too, right? So if you get in a drought situation in a county, that program is always going to pay pretty much. SCO, it costs us we get 6.56 times the coverage of what we pay for premium. So it's got to pay once every 6.5 years to get your money back out of SCO. Very, very likely there. It's paid 10 out of the last 11 years for us here in our drought counties. So if you get in a situation like that, you get so far ahead in this program that you kind of will have paid for it for the lifetime of your farm career anyways. But if these don't trigger, that just means that things kept going well in your county, right? You were above average in yield and the price stayed up. So I would seriously consider just putting money into this, and I think you're always going to get more back out of it than you pay in it. That is the case with all of these crop insurance programs, because the government is paying enough of your premium to stack the odds in your favor, right? Next thing is revenue protection. So this one's really crazy to look at. Because we are in enterprise units, it's subsidized at 80%. So the government's paying 80% of the premium here. We pay $403 an acre for $113 worth of coverage. We just have to have a total loss once in 28 years to get our premium back out of this program. So odds are in Montana, in dryland farming, even in irrigated, you're going to have way more loss occurrence than that, right? Now, the coverage number can also increase up to 2 times what you paid premium on. So because of the revenue protection thing, if we hit a year where if our wheat goes from $5.50 right now back up to $10, This coverage could go from $14 an acre up to $28 for this same premium, and I don't even have that figured into these odds here. So if you take years where you're getting more than you paid premium on, it might be that this only needs to pay out once every 6 or 7 years for ECO to break even on this product. So just wanted to point that out. And also, if you're a statistics person, this is a statistics curve down here you're looking at the bottom of the screen. As you get farther from the mean or from your average yields in this scenario, your odds don't step down in a straight line curve, right? It gets harder and harder to ever realize the $113 worth of payment on the RP side. It's very easy to get all the money out of the ECO because we just have to get down to 86% average to get all of that. And that is why you pay more premium for the same dollars of coverage in ECO versus SCO, and why it's so cheap to go down to get all that coverage in the revenue protection side, because that it's statistics, and all of this is done off of actuaries rating how likely it is for these things to happen, right? So I just wanted to explain that so you understand why it looks like $3.53 is a lot of money to pay for $14 of coverage in ECO, but it really isn't if you look at it from it might pay every other year standpoint, right? And most important slide of the day, you must use full legal signatures in all documents. They did relax this in a common sense way, so at least if we printed KW Ag in our example, if that's printed on the document, you can just sign by Wendy Falk, let's say now, or by Corey Falk member. We don't have to reprint everything. So at least a little common sense got it injected into that thing. Never wait to turn in a claim if you think you have one or if you think there's even a possibility of one. You can always turn a claim in, wait till December or whatever and finish the claim up. That's not a problem. But if we get to December, January, and you haven't turned a claim in, we are way past the late reporting period on that, and we may not be able to get anything accomplished for you, right? So it's easier to turn a loss in and sign off on it later. Don't let your adjusters throw all your production together if you have records to separate units out. It's another thing, even if you're in enterprise units, you still probably have that optional unit structure in the background. Keep all that stuff separate, because that keeps your good yields with your good land and your worse yields with your worse. So there may be a scenario where, hey, I tried canola for 5 years on this crappy part of my farm. I'm not going to do that anymore. That put all the bad canola yields down on that bad land, and it left the better stuff with the good stuff, if that makes sense. So keep that separate. Don't let them throw it together, because once they do that, we have to throw it all together in your stuff for the next crop year on the crop insurance as well. So strongly consider ECO and SCO with the current market and drought conditions. I think those programs make a lot of sense no matter what going forward, especially with the higher subsidy rate now. Never ever take yield protection on anything unless there's a very good reason to do it. The cost difference, if you're in enterprise units in those two programs, is probably 50 cents an acre for a lot of you guys. There are scenarios every year where it'll make $50 or $100 an acre difference in the loss payment just by one of these elections. So if you look through your stuff and it says YP next to any crop, get that changed and probably get a different agent would be my suggestion there. And enterprise units by type makes putting wheat into enterprise units much more appealing. Obviously, if we can separate winter wheat from spring wheat, that's always a big deal, right? And always like PLC at the FSA. That's my opinion. Now, it's possible that ARC will pay and PLC won't, but historically, that has always worked the best for all of our customers. Be in PLC, get into SCO, and then stack those programs together. If you're one of our customers, there's a checklist we're going to be calling to go through with you if you weren't at our meeting here the last 2 days. So just make sure you tell us stuff like if you're doing new braking. One of the biggest things on this is if you're changing anything in any of your entities, as far as shareholders go, if we miss a 10% shareholder getting added onto a corporation, that voids the whole policy anymore. So we get to claims time and we figure out, oh, we forgot to put our son, tell you guys that we added our son on here with some shares in the corporation. If we don't add that person now during this deadline and we get to claims time, the verbiage now in that states that voids the entire policy. So that would be very bad, obviously. So thank you guys so much for sitting through this. I really appreciate it. If you have any questions, always feel free to give us a call and ask. And obviously, we are always more than willing to take on more customers here. So if any of you are looking for a new agent, just feel free to get a hold of us. We are more than happy to accommodate that. So thanks for taking the time, and I hope you guys have a great fall.